and you've gotten outperform. What's your take on these headline numbers?
Well, I think that the $5 billion on the balance sheet is a great number. I think margin is probably why the stock's down, but I think margin is actually, if you go through the numbers in detail, is better than expected. And I think forward guidance of being of GAAP positive on net income is also good as well. So it's kind of an overreaction to the downside, in my opinion.
Well, if it's an overreaction, it's a big overreaction. I mean, shares are down 10% right now. Max, there's a disappointment here on profit. The company turned profitable at the end of last year. That reversed at the beginning of this year. Elon Musk said the company would become profitable again later this year. It looks like that's not going to happen.
So they're still trying for it, and so it should be said that there's sort of two things going on with Tesla. One is that they've been pushing like crazy for volume. They want to be, a large volume car manufacturer, one of the biggest car manufacturers in the world long term. And this car that they're selling, the Model 3, does not have great margins. It seems they push so hard to get the price down to that magic $35,000 base price. Got there. It's come up just a tiny bit, but the margins are super tight on those low-end cars. And as people buy the cheaper Model 3, they're moving away from Tesla's more expensive cars, the Model S and the Model Y. So there's this pressure on profit that is at the very least a near-term problem. And critics of the company are going to say, well, no, this is a long-term problem. This is a company that's going to have a really hard time getting to profitability.
Ben, is it a near or a long-term problem?
Well, it's not true that like the Model 3 is that they actually had better margin quarter over quarter X credits, which is what everyone wants to look at. And so it's not true that they're making improvements on the gross margin here. And so I'm not sure what that statement is.
Max?
Yeah. I mean, the company is not profitable right now. They obviously like to get profitable. I think in the long run, they want to be more efficient in the factory, be more efficient in their operations. That's the message we've been hearing from Elon Musk basically for the last year. And then they want to get these new cars out, the Model Y, which could be a huge boon for the company. That's the category of car that most Americans are buying, and also getting to China.
It's the cheaper SUV. What's the status of it?
They're working on it.
Is it going to be here next year?
I think
inquiring minds want to know.
I don't have any inside information. I think it's certainly the big effort that Tesla's doing right now on top of building a gigafactory in China, which would be huge because the Chinese market is the biggest market in the world for electric vehicles.
Ben, what's your take on how much China can change the Tesla story as they continue work on this factory, as they're continuing to try to get new models to the market?
So we don't have any production in our numbers from China this year. I think what's most underestimated about everything here is the brand in China and how it's kind of become a wildfire there, and how many cars they can sell. And I think that's upside. And just back to the cash flow they generated during the quarter, it's a couple $100 million. So this idea that they don't make money is completely wrong, and the headline needs to change. There's $5 billion in the balance sheet. They're not going out of business. You have other OEMs that have really hard problems and restructuring problems, and it's not Tesla. It's XYZ German manufacturers that are getting their lunch eaten by Tesla.